I'm calling for $500 oil by the end of the decade.
Oh,
I'm calling for 20,000 gold.
oh,
500 silver. So,
okay.
so I think gold can get to 3,000 pre-bust. So that's a huge run here. Um, and then go through a correction in the bust, big correction, maybe back to here. And then I think from there, 2025 to 2030, I think you can see 20,000. And because of what we're going to see in the bust, to pull us out of a global bust, we will probably see the balance sheet of the Fed grow from the current, 8.5 trillion, 8 trillion, to 30 trillion.
Bitcoin has only existed in frothy times. It's a very young asset, and crypto is a very young asset class. So the question is, will it do something like gold did during the 70s and sort of begin to act as a hedge against turbulent times or economic headwinds? And that's sort of a narrative that we see thrown around quite a bit, is that Bitcoin is digital gold. Or will it continue to sort of track global net liquidity, and as liquidity constraints continue to arise, Bitcoin's price will remain suppressed and sort of down in the dumps with global net liquidity. So I guess only time will tell. It's certainly a very interesting period of time for Bitcoin.
Yeah, I as I say, there's a Natalie Brunell, who is big in the Bitcoin space, interviewed me and has
Mm-hmm.
interviewed me several times. As I said to her in my last interview, my thing is that because she obviously believes strongly in Bitcoin and thinks it can be an answer to some of the problems coming up later this decade and certainly next decade. I'm calling for a total collapse next decade of the global system. My problem is there's such big macro events that Bitcoin can't solve between now and then that I think some people are putting too much faith in Bitcoin as an answer for. Yes, I'm in agreement that there's far too much government control and push for more government control, and getting outside that's great. I just see what if you're talking about a global bust, something bigger than anything we've seen in post World War II era, bigger than 2008-9, and then a huge inflation cycle, far bigger than the early 80s, where you get to 25% inflation by the end of the decade, and then a total collapse of the system, and not just the US, across the world, total collapse. As I say, you could have 50% unemployment in this country with no welfare system, no unemployment system, no, government will be bankrupt, no, limited Social Security and Medicare, if any. A total collapse. Bitcoin's not going to solve that problem for you. There'll be maybe people outside the system, a limited small percentage of the population that have Bitcoin and can say this saved me from something. But I don't see where Bitcoin is the solution for what I think is happening. We're at the end of a super cycle that began in the post Depression, the post 1930s era. We're at the end of a super cycle that I think is reaching its zenith by the end of this decade, and then a total collapse that will make the Great Depression look like a picnic. So I just don't see crypto as a solution for that. I just wanted to say there is a cycle after the bust next year, and it's a big cycle for commodities. So as in every new cycle, you have new leadership. So this cycle has been technology driven, healthcare driven, et cetera. The next cycle is going to be very much industrial and commodity driven. You're going to have reshoring. You're going to have, Belt and Road around the world. You're going to have a lot of stuff going into, you're going to be bringing back semiconductor plants here, et cetera, steel plants, et cetera. So the next cycle is going to be very driven by commodities. I'm calling for $500 oil by the end of the decade.
Oh,
I'm calling for 20,000 gold. 500 silver. So
okay.
so I think gold can get to 3,000 pre-bust. So that's a huge run here. Um, and then go through a correction in the bust, big correction, maybe back to here. And then I think from there, 2025 to 2030, I think you can see 20,000. And because of what we're going to see in the bust, to pull us out of a global bust, we will probably see the balance sheet of the Fed grow from the current, 8.5 trillion, 8 trillion, to 30 trillion. So over 20 trillion, just and again, similar around the world, all central banks would be pumping money like crazy, just because you're at a point where you're going to have big financial failure. You're going to have to save a free falling financial system in that bust. That's why I call it a bust. And so they'll print money like there's no tomorrow, but it'll come, late in the decline in the stock market, and then it will, jumpstart an inflation cycle that second half of this decade will be, something we haven't seen in this country. It will surpass by far, I think, the early 1980s, and certainly surpass the last couple of years. So, if you think about it, oil, for example, we've spent, because of climate change policy, ESG, we're forcing the carbon companies, the oil companies, to do less exploration, less development, and then we're going to print all this money around the world and ramp up demand, and development takes years, right? So you're going to have this supply-demand situation where supply is far short of demand, and the only thing that can give is price. So that's why, and the same story for copper, the same story for, you go across all, basically all the commodity space, and it's gonna be a case where demand far outstrips supply, and for a few years, price just goes through the roof. It will be, commodity cycles tend to burn out because they destroy the economy. If you get that kind of inflation, the economy goes the other way quickly. And by the way, think of the ramifications for the debt market and for the government. If I'm right, or anywhere close to right, you're going to have 15 to 20% interest rates on government debt. How do we manage our budget? That will eat up far more than our budget, right? So you won't have any money left over for military, for social programs, for anything. And so what they'll try to do early in the cycle, when rates are not that high, they'll be moving up, is they'll try to float more debt to help service the debt, right? They'll say we need more money to do these programs. But at some point, very quickly, it's like pouring gasoline on a fire. The inflation just gets hotter and hotter, and the rates keep going higher and higher. And so you're defeating your purpose. It's outracing your ability to raise money. So you get shut out of the capital markets very quickly. And that's why you ultimately collapse, because, we won't be able to service our debt. And again, I speak of the US, but this is a scenario that will go across the globe. We didn't talk too much about the metals, and I do think it's been a very discouraging area. Both silver and gold have, every time you think they're lifting their head and going, they pull back again. And when you stretch it out and have a big perspective, look at a long chart, I do think you are coming to a major bottom here, and I mean major. And I think the dollar is going to be the key for this first step up, this move in the next 6 or 8 months. I'm calling for gold to 3,000, silver to 60 before the bust. So next 6 to 8 months, I would say. And so it's easy to get discouraged because it hasn't been able to get out of its own way for this year and for quite a while. I would just tell people that's the nature of the metals. They can really knock you down, and you throw in the towel just at the wrong time. So I do think metals are going to turn here right with the equity markets.